We will now have, I think, for the first time, a totally hybrid panel with two participants in Shanghai. And I'm happy to greet here Philipp Barth. He is the Counsellor at the EU Delegation in charge of financial relations. And I'm happy, here they are, I greet Bruno Weill of the BNP Paribas Bank, and I'm happy to greet Bai-Ling Hao from Trivium China. Trivium is publishing a regular newsletter on China with very interesting features, and we'll be talking here about financial issues presently interesting in China. As Philipp is sitting here in front of me, I would like to ask him the first question. Since 2017, China has started liberalizing the financial markets. Does this mean that now foreign banks and insurance companies can operate more freely? And has and will this attract increasingly new European operators in this field?
Yeah, thank you, Michael, first of all, for having invited, and it's a pleasure.
I think you have to switch on the...
Well, anyway, thanks, Michael, for having invited us, and it's a pleasure, and many greetings from the EU delegation to Austria Connect. And yeah, coming to your question, I think it's indeed, as you said, that since 2017, China has released a number of, depending on how you count it, about 20 or so regulatory and legislative acts that have partly opened up its financial services market. So insurance companies, banks, asset management, and so on and so forth. But the qualifier partly, or as you put it in your question, more freely, and the qualifier more is important here. There's still parts of the financial services market that are inaccessible to foreign invested enterprises, or that are only accessible to foreign invested enterprises under with additional preconditions met. So the situation is not comparable, say, to that on the EU's financial services market. Should also add that the market structure in financial services is very entrenched, with large, often state-owned Chinese companies having a very strong role. And perhaps to finish and to your second part, yes, I mean, there were, of course, when the openings first happened, a number of foreign companies coming into China. We've recently also seen that in the field of asset management. But it's also the case that some companies have since left again China or had to scale down their operations. And generally speaking, many foreign banks have reconcentrated on the field of corporate banking, and some clearly had larger ambitions to start with.
Okay, then thank you for this introduction. Now I would like to talk somebody concerned directly by these reforms. Bruno Weill, you're heading a French bank, and what did these reforms mean for the general business of your bank? Can you do operations now you were not allowed to do before? Does this win you new foreign or local clients? What are your perspective on these reforms?
Thank you, Michael. I have the, we say that we are not a French bank, we say that European bank, but fine. I mean, our head office is indeed in Paris. So more seriously, to answer to your questions, I mean, a few things. The first one, to complement what just Philipp said. There's a big difference between market access and market opening, not in Europe. As Philipp said, once you have accessed the market, well, the market is open, but in China, accessing the market means that you're allowed to invest more money. Opening is once you have accessed the market, are you able to grow your business, provide services of quality to your client and make money? And these are two very different things. In particular, because the ecosystem in China is very much about, number one, very little product differentiation. Basically, we are asked to do exactly more or less the same products than Chinese banks. No real product differentiation capabilities in banking, in insurance, in asset management, or very little. Second, we are asked to localize more and more activities in China in terms of IT, mid and back office. And thirdly, and this is true for us, international banks, but it's also true for small and medium-sized Chinese banks, regulation in the financial industry is very much favoring large institutions, because no market, differentiation in terms of product, it means that everything is about economy of scale. So if you're really big, you can make money. If you are average or small, it's very difficult. And it's very difficult to go from small to big. And again, this is true for small Chinese banks. This is true for, us, international banks. And the second thing is large institutions have a privilege to get access first to licenses and new products, while small and medium-sized Chinese banks and international banks after, again, favoring the big players. So we are in an ecosystem which is not really allowing small players like international banks to really grow and to become really meaningful in the Chinese market. Again, same issue for medium-sized Chinese banks and small Chinese banks, but it doesn't make us more happy. To come back on what you're saying, so what can we do? We are very much focused, as you rightly said, on corporates and financial institutions, basically being the bank of Chinese companies doing cross-border business and being the bank of large international companies doing business in China. International banks are not capable really to provide good services for SMEs, international SMEs and Chinese SMEs. Some people have tried. Citibank, as you probably know, had to leave and get rid of its branch network. HSBC is still trying to do it, but they have a very small network of only 160 branches. Just to give you an idea, 160 branches for whole China is not even half of what ICBC or Bank of China has just in the city of Beijing or in the city of Shanghai. So very, very small, impossible for them to make money because, again, the economy of scale activity. So what we do is really niche, focusing on some activities. For example, we do a lot of bond underwriting, derivative, helping our clients to hedge, or cross-border cash management. This is really what some international banks like BNP Paribas is really capable to do and provide value. The second thing that some banks are doing is partnership and joint ventures. And when you do JVs in China, if you choose rightly your partner in the financial industry, you can gain the economy of scale and you can be very profitable and with very good services. I can give you an example if you want, but maybe later.
Okay, so how much you estimate the market share of international or foreign banks in China?
Again, if you take the whole banking activity, foreign banks have probably a 1% something market share. And this market share has been strongly decreasing over the last 17 years since China entered WTO. Not because we are not growing, it's just because, again, as I said, because of the logic of the system favoring the big ones, we are growing not as quickly as the big Chinese banks. And this is structurally. So again, market share is not really what any foreign banks, any international bank is really looking for. While we're looking at some niche in the corporate and financial market activities where we have much better qualification in some niche products, especially on derivative, on bond underwriting, cross-border business. Here we are pretty good and with decent margins for the moment. And as I said, in joint venture and partnership, just to give you some ideas, we have created, for example, a consumer finance activity with a medium-sized Chinese bank called Bank of Nanjing. And today we have about 75 billion RMB of consumer finance loans. This is, as you can imagine, a lot of fridge, TVs and mobile phone. We are doing with Geely, the car manufacturer, all their car financing and all their car leasing for all over China. Again, it's about 70 billion RMB, so it's a lot of cars. And again, these are the ways as a foreign bank, in fact, in our view, to develop really in a market where you need economy of scale, the capability, so to team up with a local partner, which gives you the market access, the distribution capabilities, the branding, and the size.
Okay, well, thank you very much for this first comment. I would like now to ask Baoling Hao. We have heard that the Chinese central bank is preparing the digital yuan. So do the reforms which have been undertaken in the financial sector, do they have to be seen in the context of this future digital yuan? And there have been test runs already made in some cities. How is it working? What are the results for the digital yuan users? And will this change the economic daily life in China? I mean, we all know WeChat Pay and Alipay. Will there be any difference once the digital yuan will be around?
Yeah, thank you, Michael. So I think before we get into these complicated questions, I want, to clarify what digital yuan is and what it can do, right? Because there's so much confusion around this concept. I get questions like, how is it different from Bitcoin, right? And stuff like that. So the way I look at it is to put it under the context of WeChat Pay, right? I'm sure you all used WeChat Pay, right? So when you transfer money to your friends on WeChat, that money automatically gets into your WeChat Pay wallet, right? And digital yuan is essentially no different than the money sitting in your WeChat Pay wallet. Why do I say that? Because if you think about it, they both have the exact same features, right? It doesn't pay interest. You cannot borrow against it. All you can do with digital yuan is to use it to make small payments, right? You can transfer digital yuan around to your friends. You can cash out, no problem. You can also top up, right? And that's it. There's not much else you can really do with it, right? It's pretty much separated from the traditional financial system. You cannot have digital yuan in your traditional bank account, right? There's no such a thing as digital yuan credit card. You cannot buy financial assets with it either. So from a Chinese consumer perspective, right, digital yuan is similar to the money sitting in your WeChat Pay wallet. They have the same experience, the user experience, and the same features. The big difference is that they're running on two different systems, right? One is managed by a private company, whereas the other is running on a central bank system. And it is a new system, right? And we can get into the potential of the new system later, but going back to the question, is it going to change people's lives in China? Probably not at the moment, right? Because WeChat Pay and Alipay are, great products. Digital yuan can't really add much value for Chinese consumers, but it might target some unserved markets, like the Chinese elderly who don't use smartphones, right? My grandma doesn't use Alipay or WeChat Pay, right? She could be a potential customer, or maybe in the cross-border payment space. But it will take time, because central bank digital currency is still an experiment. So I think we need to give it time to prove itself.
But you said it will be run by the central bank. Does this mean that everybody will have an account with the central bank?
So the way you have not account necessarily, the way you use digital yuan is to have it in a digital wallet. And that right now we have 3 digital wallets to use this currency. Alipay is one, WeChat Pay is another, and the central bank, they have their own digital wallet app. So these are the 3 apps you can use digital currency. You don't really need actually an open account with the central bank.
So I think, Bruno, we have talked about it before, maybe just to give our public the idea of how this can work. You told me that it runs through the private bank accounts, which are somehow held by not the central bank directly, but by big banks.
Okay, a few comments. The first thing is, why is it important for the central bank to implement this? Because today we have a duopoly by Tencent and Alibaba. I mean, we don't feel it because we are paying, and whatever we pay with WeChat Pay or Alipay, it's free for us. But it's not free for the companies, for the retailers. When you go to Starbucks, I mean, you don't know it, but Starbucks is paying in average 0.6% on every single payment transaction. It's huge, very significant. And this is the same thing if you're paying by WeChat or Alipay, because basically these two guys are the only two options. And so there is, in the view, and again, in the word of the PBOC, an abuse of dominant position. So basically the main purpose is for the central bank to be able to say, okay, corporates, companies, Starbucks will pay zero fees when they use the digital currency. So the big advantage is going to be for the companies which will not be forced to pay this fee and which therefore could eventually, if they wish, transfer part of this gain to their clients. So this is the number one advantage for the digital currency in the view of not only the central bank, but as I said, for a lot of retail companies which are paying huge amounts to Tencent and Alibaba. Second, how is it going to work? Indeed, we are not going to open accounts at the PBOC, at the central bank. The PBOC have no intention to open billions of accounts for all companies and people. So it will work with tiers. Basically, 7 banks plus Alibaba and Tencent have got the right to be what they call tier 2, basically the one that can do the transaction. But then you will work with your normal bank. So you will do, you will have a e-RMB wallet account on your mobile phone that will work with or without internet connection. And you will put money from your bank account into that. The transaction will then be linked, depending on your bank agreement, with one of these 7 banks, and then the payment will be paid by one of these 7 banks to, well, let's say Starbucks, to come back to this example, will receive your money, but they will receive it through their own bank, not directly by the 7 banks. So it's not about creating another monopoly with 7 banks controlling the whole market. So it's going to work by tier. A few foreign banks are going to be involved at the early stage. BNP Paribas is going to be one of them, and we are in very, very active and advanced discussion on implementing. And very soon, hopefully before the end of this year, we'll be working with our first clients to start to provide them with e-RMB payments for their clients.
That sounds very interesting. Philipp, would you like to comment on that from the EU point of view?
So yes, we are observing this, the development of the digitalization of the RMB here in China. We are also working, of course, on the digital euro. We have regular information exchanges with this, with the Chinese side. And it's something that we follow with interest. Indeed, China is quite ahead when it comes to the digitalization of its currency, or development of the central bank digital currencies. Generally, I think I'd also would like to add that one of the motivations on the part of the Chinese government here, and then implemented by the central bank, is that the digitalization of the RMB in the very long run, and if it did gain some degree of international acceptance, there is currently also a pilot on this, very limited in scope, but it has started, then this would also contribute to the longer-term Chinese strategic ambition to reduce dependency on the US dollar or the euro to promote its own currency as an international trade currency. So that aspect of further pushing the development of the digital RMB is also certainly there in the minds, perhaps not necessarily on the level of involved banks, but certainly when you look at the broader governmental ambitions here.
Mr. Bao, what's you? Sorry, yeah, please.
Okay, so the way I look at it is CIPS and SWIFT are not direct competitors, right? CIPS is a clearing system that is responsible for, clear the settlement, the cross-border settlement. But SWIFT is merely a messaging system, right? It's sending secure message from telling banks or clearing system to fulfill these money transfer requests, right? So they are not same part of the value chain, right? And I agree with the previous point that, when it comes to digital yuan, it's opportunity for the central bank to build a new financial infrastructure that is different from the legacy financial infrastructure. Because if you look at the international payments right now, it works fine for large payments, right? But the pain points are really the small cross-border payments. They're costly and inefficient. So that's where digital currency could potentially play a role. They can establish a more efficient system to allow these small transactions to even be possible. All right, in the first place, they can start playing these unserved markets doing these small retail cross-border transactions. I think that is the the first step if you think the international potential of digital yuan.
Can we also hear your opinion on that, Bruno?
Yes, just to comment, because I mean, very much in line with what was just said. I mean, again, first step of the e-renminbi is very much about onshore retail people buying, selling. Second, if we talk about internationalization of the use of e-renminbi, for example, today, well, there's not much traveling between Chinese tourists going to Europe or to Austria and Austrian going to China. But there was a time, if you remember well, a few years ago, where a lot of Chinese were traveling to Europe and they were paying by WeChat and Alipay at airport, buying, I mean, in some shops without problem. This was perfect on the surface. The reality is the retailer was getting the money 3-4 days after the payment and with even more fees. So the idea is once payment will be done by e-renminbi, obviously payment will be instantaneous for the retailer, the Austrian retailer at the airport, for example, or whatever site in Austria that will receive a payment by a Chinese tourist. Vice versa, as we all remember, I mean, when you go from Europe, Austria to China, you arrive maybe with some renminbi in your pocket that you change at a bank in Austria, and you're very unhappy because you find out that your taxi driver doesn't accept cash, that your Starbucks doesn't accept cash, and you have to pay with e-renminbi, with WeChat and Alipay, which obviously you cannot have because you don't have a Chinese bank account, and if you don't have a Chinese bank account, you cannot use WeChat Pay and Alipay. So the idea here again on internationalization, this is phase 2, is to allow foreign travelers, foreign businessmen coming to China, foreign tourists, to have an e-renminbi wallet in their telephone even before they leave their country. So when they arrive in China, they have money on their telephone and they can pay as if they had a bank account in China and without any problem. They can book taxi on any application, which again, you cannot do if you don't have a bank account. So it will hopefully facilitate a lot the life of Chinese tourists going to Europe and vice versa, European businessmen and tourists coming to China in the future. On the business side, indeed, I mean, what Mr. Barth said is absolutely true. It could help a lot of the small amount transaction when people are buying on internet sites in China, some items for European goods and vice versa. Again, cost of these transactions is quite high. System today are very well adapt for big transaction between big corporate, not so much for this cross-border internet payment system for small goods and retail.
I see. I would like to come back to the CIPS system. In some newspapers, one could read that it might be used by the Russians to circumvent their shutout of SWIFT. You think this is workable, or is this just a journalistic idea?
Again, SWIFT is first and foremost a messaging system. It's a tool for all the banks in the world to pass information on the payment. And this is something that CIPS is not really capable to do because, again, the key important things today in a transaction is almost not the transfer of the money, is to make sure that the money a bank is receiving is coming from a guy which is not, I mean, the cousin of Osama bin Laden, and which you're not going to transfer it to the nephew of Osama bin Laden. I'm joking, but these are the important part. Where is the money coming from? Where is it going to? what for? And these are information which are far beyond just the transfer and the payment. And CIPS is not well equipped, whether, I mean, the existing system is very, very much well accepted for information. So it's going to take time. It's going to take time. So I mean, there's a lot of advertisement on big transactions, on some transactions that are done today in renminbi or in ruble. But again, today, well, I mean, we've seen, for example, things with India. Well, it's not really working. It's not really working, and it's going to take a lot of time. A lot of time. Mr. Bao, a comment on that?
Yes. So I think currency, right, is a zero-sum game, right? The more you use dollar, the less you use RMB, right? So it really depends on the relative power of the two nations, right? And that power is dependent on a lot of different factors, right? We talked about a digital yuan, right? That is a technological factor, but that technology is not going to solve other policy-driven factors, right? Right now, you still cannot convert RMB to other currencies at will, right? You cannot invest in Chinese markets freely, and you cannot pull your money out from Chinese market anytime you want. So these are the factors that are holding foreign business and investors from doing RMB transactions, right? Unless China has a more developed and free financial markets, I don't think the share of the RMB settlement is gonna change that much.
And do you think the Chinese government can undertake some steps to free the currency transactions? So you think they would give up part of their control anytime soon, or is it probably more of the same?
Sure. I think they're trying to move towards that direction, but the progress has been pretty slow, right? Because there are also lots of internal problems they need to deal with first. But until they solve these problems, they're not gonna, open the, valve. They're not gonna rip off the Band-Aid all at once. It's gonna be like a gradual process towards that. But I think having a open financial market and a strong financial market that people can invest in your assets is the ultimate goal. It's just gonna, take a long time to happen.
Okay, maybe we should see if somebody in the audience has some questions to our panelists. Is there anybody who would like to ask them?
I don't know whether this question was touched because it was briefly outside, but is there any comments on the ruble situation?
Bruno, would you like to talk about we have already touched it with the CIPS. Would you like to say something about the China, Russia, and the ruble situation?
This is a question for our friends of the EU delegation. I mean, the problem for banks is when we know we can talk and when we don't know, when there's nothing to talk. So sorry.
What we can say is, I mean, it is well known that there's, China and Russia have significant bilateral trade. They have an interest in this bilateral trade being done when possible in their own respective currencies, in line with what I said earlier, and the interest to internationalize their currencies to reduce dependency on the US dollar, which again is, the dependency of which is one of the mechanisms why the sanctions have had the impact that they have had to date. Other than that, I think I will leave it at that. There is a currency swap agreement between central banks, the Chinese central bank and the Russian central bank. These are usual arrangements in the international arena when it comes to facilitating bilateral trade. I think I leave it at that description.
Thank you. Anybody from the public? Otherwise, Bruno, you would have a comment on what we said before. Anything you would like to add in regard to digital yuan, market reforms? For instance, do you think the reforms will favor the listing of Chinese companies on foreign stock exchange? Because recently there have been some hiccups in this field, if I understand well.
Yes, indeed. I mean, there is some, some people are still working on that. I mean, in several European markets, working on providing capabilities for Chinese companies to list in a bit easier manner in the European market, especially in light of the growing difficulties to be listed in the US market. Currently, I mean, the trend is more to list in Hong Kong and for Chinese companies to delist in the US, list back in Hong Kong and in Shanghai or in the other Chinese markets. Not so sure that there's a lot of volume that will take place, maybe a few deals. But beside the technical part, I mean, then the question is just the appetite. As Philipp was highlighting, I mean, it's a complicated environment, and I'm not so sure that in today's environment, a listing by a Chinese company in a European stock market will attract a lot of, very significant interest. I mean, there are ways to, again, to attract European investments in China, in these companies, to buy their stocks without having to do the listing in Europe. And a lot of European institutional investors are using it. I'm not so sure that we'll see a lot of deals.
What about Chinese bonds? You think they will become increasingly attractive for European investors?
Okay, I mean, over the last few years, we've seen a very, very significant increase of international investors buying Chinese equity and Chinese bonds. And again, for a very, very simple reason is that interest rate in Europe has been particularly low. And if you and I in Europe, we want to have a decent retirement scheme, we need our life insurance company, we need our retirement scheme fund company to find yield so that they can pay us a decent retirement. And China, until now, has proven to have a pretty good return with not too high risk. This being said, I mean, we're entering into a new phase for various reasons. Number one, unfortunately, because of inflation, interest rates are rising, or fortunately to a certain extent, but unfortunately to the extent it's going, maybe interest rates are increasing in Europe, and therefore the attractiveness of a Chinese investment in a bond is reducing. So we'll see. So that's the first thing. The second thing, because of a bit of a slowdown of the economy in China and because of certain risk event, in particular on real estate, I mean, the risk of buying Chinese bond is also perceived as increasing. And thirdly, I mean, the market sentiment is also changing a bit. So we've seen over the last few months outflows, which is again very different from what we've seen in the last 2 to 3 years as a trend. It remains to be seen if it's going to be a long-term trend, but yeah, I mean, the environment, let's say, is a bit less favorable for foreign investment in the bond market in China.
Okay, Philipp, please.
Yeah, just to add perhaps that from just looking at the regulations or the relevant legal provisions actually for Chinese companies to list abroad, this has recently become rather more cumbersome also if you look at a Chinese domestic regulation. Perhaps every year there's the famous negative list being released by Chinese State Council, which defines which parts of the Chinese economy are close to foreign investment, so in which parts foreign investors are not welcome. And now, so far, this has always just covered FDI, foreign direct investment. But last year, actually, this also covered the listing of Chinese companies abroad. So if you are a Chinese company in a sector that is closed off to foreign investment, then also you're no longer free to list abroad, or only may do so after having obtained government approval. In the past, there was also a famous loophole. So, well, I'm not sure it's a loophole, but there was a famous way to circumvent various regulation, various domestic red tape, let's say, and that's the so-called VIE structure, variable interest entity. So where, a lot of famous Chinese companies, for instance, Alibaba and so on, when they list abroad, when they listed in New York, for example, it was the VIE entity of that company that was listed and traded there, which then had contractual, relations with the owners of the means of production of the capital, the employer here in China. And that is now also subject, if you want to list abroad as a Chinese company using this structure, this VIE structure, that now also needs a regulatory approval, whereas this wasn't the case before. So, in China, you could say the regulation has been unified, but you could also say that there are some additional regulatory hurdles now that didn't exist previously.
Okay. Mr. Bao, a comment on that?
Yeah, so I think the game is basically over for Chinese big tech firms to go to IPO in the US, right? I'm sure you've all seen like what happened to Didi last year. I think the stance from China is pretty clear. Big tech company US IPO is a big no, but maybe okay for some other companies. And also like the US listed Chinese companies are in a very peculiar spot because on one hand, Chinese policymakers want them to come back. And on the other hand, the US regulators try to kick them out. So, and now China and the US are in a bilateral negotiation on how they're gonna deal with all these 250, about 250 Chinese companies listing in the US. If they cannot reach a deal, all of them will be delisted from the US exchanges by around early 2024. So they got like 2 years timeline. Or they could like reach a partial a deal. But I think at best, I think the US listed Chinese tech companies will be delisted eventually because China is building up its data governance regime, right? Particularly on like cross-border data securities. And they view listing in the US as a serious threat to the cross-border data security. So I think that is the situation we're dealing with.
Okay. So, I would like to invite you everybody to a final statement. Maybe we start with Bruno. We have reached our, it's almost 12. So I would like to invite you. First of all, I want to thank you for having participated in this panel. It was a very interesting discussion. And I would now invite you for your final statement. Thank you.
Thank you very much, Michael. Thank you very much for organizing this. And thank you again to Philipp and to Mr. Barth for sharing this panel with me. I mean, very interesting. And I hope our audience enjoy it. Maybe to conclude on a more optimistic note, because I mean, as always in these kind of forum, we talk a lot about the problems. I mean, that's partly what I'm paid for, to try to manage the problem, but there are still plenty of opportunities in China. I mean, the market is complicated. But a lot of international companies, and particularly big ones, are still investing in China. International banks are still growing their activities in China. Some are retrenching, but some are increasing, and we are increasing. We can provide quite a lot of value. I mean, today's environment, in particular in Shanghai with the COVID, is making our life and the life of our client extremely complicated. But we are doing, all the international banks are doing their best to continue servicing their clients. I mean, we all have people in self-lockdown in our offices trying to do all the transactions for our clients. So, I mean, I want to conclude on this positive note that, again, market is complicated, things are complicated, but there are ways to help our clients, and we are doing our best effort to support all the companies in China and Chinese companies in Europe.
Well, thank you very much. I hope you will be let out soon and can walk about Shanghai and do whatever you want. Mr. Bao, please, your final statement. Yeah.
Yeah. thank you, Michael, and the panelists for the interesting discussion. So I just want to have like a couple comments on the reserve currency thing, right? I highly recommend a video on YouTube made by Ray Dalio called Changing World Orders, right? So that's how we should view this reserve currency status, right? So it's about the relative power of the two nations. And there are many factors we can look at: education, right? Trade, military, financial center, and reserve currency status, right? If you assume like China is eventually gonna, surpass US on all these fronts, reserve currency status is actually the last thing is gonna happen. So we're looking at a very long term, maybe a few decades old for RMB to even potentially to challenge the US dollar status. Yeah, so that's what I have to say.
Okay, well, thank you very much. And I want to say to our public that Trivium is a think tank which publishes very interesting newsletters on the recent actualities in China. So maybe we should put that in the post-conference information so that people know where to find you, and if they want to subscribe, that's then up to them. Anyway, thank you very much for participating. Well, thank you very much. All the best to our friends in Shanghai, and we really wish you that your lockdown will end soon. Yeah. Okay. Thanks a lot. Thank you. Thank you. Bye-bye.